You're welcome to the Forex Trading and Lifestyle Entrepreneurship channel. You take a minute to pause this video and read this disclaimer.
Hi, it's Victor here once again from foreshowmarkets.com. So in today's video, I'm going to be sharing with you the often repeated disclaimer you hear, and it goes like this: past performance does not guarantee future returns. Okay, past performance does not guarantee future returns. So I'm going to state it back as a question: does past performance guarantee future returns? Okay, and so if you've been in the investment space, you've been working in the investment space, finance, mutual funds, hedge funds, FX investment, stock investment, and all of that, mutual funds and all of that, you would always see this income disclaimer: past performance does not guarantee future returns. But the question is this true or false? Okay, is this true or false? This has always gotten me wondering. So let's go into this concept and see if we can establish some facts. All right, so let's look at society. Basically, society generally has taught us, okay, to look at the past in order to take decisions concerning the future. Okay, for example, if you take a loan from a bank, maybe a bank or a microfinance bank and all of that, all right, and you paid up the loan, you have a monthly installment to pay, and you paid up the loan as at when due every single month until you cleared that loan. Okay, automatically your credit history is rising. Okay, and when you want to take another loan, they tend to look at your past performance. Basically, okay, they're able to look at, okay, this guy took a loan before and was faithful in paying it month to month, no default whatsoever. Okay, if you can do that 1, 2, 3, 4 times, the bank themselves are the ones that will start begging you to come and take loan. Okay, so that is one scenario where you take in terms of the loan repayment example. Okay, so in that case, we can see that the banks, the finance firms, when they want to give out loans, they tend to look at your credit history, they tend to look at your past performance, okay, just as a measure, not necessarily to guarantee the future, okay, but to have an idea, to predict, as a predictor, okay, of what is likely to happen. That is for loans. Now let's look at university applications. Okay, when you are applying for university, example, you are applying for a master's degree, you have completed your first degree. Okay, now high ranking universities, especially the ones abroad, as example the US, would always look at your performance. Okay, how well did you do in your first degree? First class, second class upper. Okay, they would look at your experience. Do you have any job experience? Okay, have you been involved in any form of leadership and team building and all that kind of stuff? Okay, and so they use your past experience, your past results, okay, your past performance, basically, to decide if they want to take you, okay, on their program. So that's for university. Another one is a job application. Okay, when you're applying for a job, okay, most times you would even hear stuff like minimum 10 years experience required, minimum 5 years experience required. Okay, why is this so? Because they feel, okay, if you have done this role in another company years back, or in your previous company, you will be able to fit in perfectly, to that same role in their own company. What have they done there? They have looked at your past performance, okay, to have an idea of if you are a good fit, okay, and if you fit into the future of that company. Same thing with criminal offenses and all of that. So it cuts across all aspects of society. So now let's look at the investment the investment niche, the investment industry, does this hold? Past performance does not guarantee future returns. Is this true or is it false? All right. Let's take a look at the S&P 500. So on my screen, you can see a chart of the S&P 500. Okay, the S&P 500 is a combination of 500 US stocks that meet certain criteria. Okay, and the S&P 500 is usually used as an investment benchmark. Okay, of what return should be. Okay, so this is an S&P 500 chart dating back as far as 2003. Okay, as far back as 2003, and as you can see on this chart, okay, from 2003 down to 2020, right now, 17 years later, we can see this chart in a clear uptrend. Okay, why is that so? Because generally you expect that companies are going to grow. Okay, Facebook 10 years ago, Facebook 5 years ago, and Facebook now cannot be at the same value. They are expected to grow. Amazon 10 years ago, 5 years ago, okay, cannot be at the same value as it is now, because you expect the stocks of good companies to grow. So generally you expect that the stocks S&P 500 to continue going higher, even though in the midst of its movement you could have, like you see here, you can have downtrends. This was 2007, okay, and then 2010, 2020, okay. From 2020 you had another down move. This is 2007. So 2007, 2020, that's 13 years. Okay, 13 years. So if you're a good technical analyst, even the concept of technical analysis, okay, teaches us that we can use previous history, okay, previous price action, previous price patterns as not as a guarantee, but to predict the future. Am I communicating? So you're saying that to an extent, okay, past performance may not guarantee, but it is a very, very good predictor. Okay, so 13 years ago there was a crash. 13 years later there was another crash. So I could expect that 13 years down the line, so we're in 2020 now, okay, so in 2023 it's most likely, okay, that it's possible that this market continues going up from here on out for the next 13 years, and somewhere around 2033, 2030, 2033 should be expecting another crash in the market. Okay, it's not a guarantee, but we try to use the historical events to predict the future. Okay, having said that, is past performance a guarantee of future returns? No, it is not. It's not cast in stone. It is not a guarantee, okay, but it is a good predictor, okay, of what can happen in the future. And that is what investment is all about. Okay, in investment there is nothing like guarantee. Okay, there is nothing like a guaranteed investment. That is why you always have an element of risk in investing. Okay, and that is where you need to do your own due diligence and decide if you want to take the risk or not. You need the courage to take the risk. You need the courage, to overcome the fear of the unknown and take a step. Okay, but if you're going to wait for everything to be perfect, for everything to be guaranteed, okay, then you're not going to make a move, and most likely you are going to miss out on very, very, very profitable investment. Okay, we know about the story of Bitcoin. Okay, how about 10 years ago Bitcoin came, and I wish I knew about Bitcoin. I knew about Bitcoin in 2017. Okay, but I know who I am. If I had known about it in 2010, 2011, I definitely would have taken a position. Okay, and so you see the concept of Bitcoin. A lot of people were hearing that this stuff has potential to explode, to go big. Okay, some took the risk. Okay, some didn't take the risk. Okay, those who didn't take the risk, did they do anything wrong? No. Those who took the risk, did they do anything wrong or right? Not really. It's just a matter of time and chance, and they took the risk and it paid off. That is all of investing for you. Where I am today in investing and all the money I made was because I have embraced risk. I'm a risk taker. Okay, and so if you really want to go far in investing, you want to learn how to take risk. You want to learn how to take risk. I've come across so many investors, so many traders. Once they see their portfolio going down a bit, 5%, 10%, they begin to call you left, right, and center. Like, what is happening? What is happening? No, man. The moment you put your money down, the mindset should be, if this money goes, it goes. That's it. If the money goes, it goes. But it doesn't mean you should be careless about investment. It doesn't mean you shouldn't do your due diligence. But once you do your due diligence and you take that step, okay, you need to let go and let the market do what it wants to do. And that is why it is said, invest only what you can afford to lose. Okay, even those guys that invest in MMM and all of that, this guarantee is the reason why you are scammed. Okay, all of these Ponzi's that are going on around, people, I don't want to mention names. Okay, even those that have offices, you understand, giving you guaranteed returns. There is nothing like guaranteed returns. Okay, they only offer you guaranteed returns because that is what you want to hear. That is what is going to attract you to invest. But there's nothing like guaranteed returns. If that company goes down, your money goes. There's nothing like the insurance. Go check the insurance. The insurance does not cover third party. Okay, so I hope I'm communicating. I hope you are getting value. So risk is about accepting that, you know what, I'm going to invest this small portion, not your life savings. Invest this small portion in forex. Okay, let me invest this small portion in forex and see where it leads me. Okay, and when you do any investment, be it real estate, forex, cryptocurrency, stocks, okay, invest what you know that if this money goes, it goes none here. You understand? It is what it is. Okay, but I tell you what, the millions of naira and the thousands of dollars that I've made, okay, till today is based on the fact that I have been taking a risk, and of course I'm experienced in taking risk. Okay, so you cannot transfer accepting risk to somebody else. It is part of the game. Real estate, forex, cryptocurrency, even your physical brick and mortar business, there are still risks involved. Okay, so the aim is not to scare you or discourage you, okay, in investing or doing anything investing. Okay, whatever you fear, you should face it head on. Okay, if you fear investing, invest more. Okay, so even the money that you keep in the bank, it's not guaranteed. The money you keep in the bank is not guaranteed. So what are we talking about? All right, so does past performance guarantee future returns? No, it doesn't guarantee future returns, but past performance can be a good predictor, okay, of what can happen in the future, and that is the basis of why we take or make investment decisions. Okay, let me show you something else. We are the strategy managers on FXTM Invest. Okay, so now, how do you escape being scammed, or how do you escape making mistakes in investing? Okay, a lot of times, a lot of people come to you brandishing their past performance. Okay, let me see if I can find this guy, Big Day. Yes, Big Day 2. Okay, especially in the FX industry. Okay, you can see somebody who makes, okay, this guy is of Big Day 2, Big Wheels. You can see somebody who makes 1,000% in 1 month, and you would be attracted. Okay, all of these guys' profiles have been deleted. Let me check Zal Capital. They have all been deleted. Okay, so I've been looking for guys who made, maybe 10,000% in 3 months, 4 months. Okay, and then they crashed the account. Okay, so the whole idea is past performance. Okay, the longer the performance, the more reliable it is. So when somebody brings a 1 month trading statement to you, okay, and said I doubled my account in 1 month, that's not a time for you to get excited. Okay, that's not a time for you to get excited. This guy is making money. No, you need to see a pattern over a period of time. You need to see the drawdown on that trading, okay, for you to be able to make a good decision, okay, if the past performance will be a good predictor. Personally, when I see guys like this, so this is trading memory, excellent results, no doubt. A guy like this who has made 16,000%, that's about 160 times of his initial capital in 253 days, less than a year. You should know already that is high risk. Okay, you should know already that is high risk. Yeah, it's going to do well for a while, but then it's later going to crash. So if you are playing this, you need to play it like you are taking high risk and be expectant that this is going to crash anytime. So if you make money, all well and good. If you don't make money, all well and good. Okay, so I will do another video showing you how to analyze past performance, okay, for you to see if it's something worth taking a step into or if it's something worth running away. Personally, this is attractive, but me, I will run fast away from such investment. I have purged my mind of greed. I've purged my mind of making money fast, because that is the reason why we struggled as traders. Okay, until you purge your mind of greed. The moment you purge your mind of greed and you're ready to go slow and steady, okay, things are going to change in your trading. Things are going to change in your investing pattern. Okay, so I hope you've learned something new in today's video. If you've learned something new, give us a thumbs up, smash the like button, okay, and also if you have received value in this video, okay, click the subscribe button. If you're yet to subscribe, click the bell beside the subscribe button and click all notifications so you can get notified whenever we upload a new video. Thank you so much for watching. I'll see you in the next video. Cheers.